Good morning, it's Monday the 13th of June and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards and give our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with an update on GDP growth here in the UK, and we'll give our expectations and thoughts on this straight afterwards. As inflation runs rampant through most of the world's leading economies, the running question remains as to whether it has indeed peaked yet. Well, Germany gives us their latest update on Tuesday, and we'll give our thoughts on this in more detail shortly. Also on Tuesday, UK unemployment, ZEW economic sentiment, and finally PPIs in the US. On Wednesday, we'll get updates from Australia on their consumer confidence figures, and China also updates us on their retail sales figures, which we'll discuss shortly. We'll also get a retail sales update from the US. And finally on Wednesday, also in the US, it's interest rate decision day, as the Fed announces their latest decision, and we'll discuss this in more detail later in today's report. It's also the UK's turn on Thursday as the Bank of England decides on UK interest rates. Is it going to be 5 straight hikes in a row? Well, we'll give our thoughts on this afterwards. Switzerland also announces their latest decision on Thursday, and to wrap up the day's announcements, Australia updates us with their latest unemployment figures. And finally on Friday, it's Japan's turn on interest rates, as well as an update on final inflation figures over in the Eurozone. And the companies that we'll hear updates from this week are as follows. Today it's the turn of Oracle. On Tuesday we'll hear from Ferguson, Ashtead, Oxford Instruments, Crest Nicholson and Bellway. On Wednesday we'll hear from Whitbread. And on Thursday, online fashion retailer Boohoo released their Q1 results, and we'll take a closer look at these with our own thoughts shortly. Also on Thursday, we'll hear from Adobe and Kroger. And towards the end of today's report, we'll also give our thoughts and analysis on two of our big retailers, Tesco and HALFORDS, who released their Q1s and full year results respectively on Friday. So the question whether inflation is slowing and central bank action are without doubt the key themes this week, after last week saw the ECB signal a July rate hike. US inflation hit a fresh 40-year high at 8.6%, and global growth forecasts were slashed by both the OECD and the World Bank. Well, this week, 4 major central banks will announce their rate decisions, including the Fed, the Bank of England, the Swiss National Bank and Japan's central bank. Unsurprisingly, traders will be watching forward guidance very closely indeed for clues over what to expect over the next coming months. So with all that in mind, let's dive deeper into this week's big stories. Well, Monday brings us an update on GDP growth here in the UK. Well, the UK economy actually contracted by 0.1% month on month in March and is expected to grow just 0.1% month on month in April. Well, the data comes after dismal economic forecasts from the World Bank and the OECD, which warn that surging petrol prices and a crippling cost of living crisis would mean that Britain will be the weakest economy in the G7 next year. Weaker than forecast, growth could hit risk sentiment and the pound. We get an update on inflation in Germany on Tuesday, and German consumer price inflation rose to a record high of 8.7% year on year in April, amidst rising energy prices, food prices and supply chain disruptions. Inflation is actually expected to ease slightly in May to 7.8%. Could this feed the narrative that peak inflation has passed? With oil prices rising up 20% in just 7 weeks and German PPI at a record 31%, it certainly seems optimistic to assume peak inflation has passed in Europe. The data comes after the ECB signalled it would raise interest rates at the July meeting. So as a result, do keep an eye on the euro and the DAX. China updates us on their retail sales figures on Wednesday. Now, last month, retail sales fell to the lowest level in 2 years, as virus controls meant that consumers were, of course, severely restricted. In March, retail sales fell by 3.5%, marking the first decline since July 2020. April saw an even larger drop of 11.1%, much steeper than the 6.6% contraction forecast. May will likely see sales remain depressed, given that the economy didn't reopen until June. Expectations are for retail sales to fall down 6.1% year-on-year in May. And since Shanghai reopened last week, there have been some mini lockdowns, fueling doubts over whether China will see a strong recovery or whether there will indeed be more pain for the economy to come amidst zero virus policies still yet being implemented. So as a result, do keep an eye on the China proxy, the Australian dollar. It's interest rate decision day in the US on Wednesday, and following a 50 basis point rate hike in May, the Fed is expected to raise interest rates by 50 basis points in the June meeting, and again another 50 basis point rate hike scheduled for July. The US Central Bank has indicated these hikes clearly, and there is uncertainty over what the Fed will do beyond July. Will the Reserve continue to hike aggressively and risk pushing the US into recession? A big question. Investors will be keen to see where the Fed sees monetary policy heading in Q3 and Q4. Policymakers have given mixed messages, with James Bullard pointing to further aggressive tightening, but Raphael Bostic suggesting that the Fed could pause the hiking cycle. A hawkish Fed could lift the US dollar to fresh 7-year highs. Online retailer Boohoo will update the market on its performance for the first 3 months to the end of May on Thursday. Analysts are looking for revenues of £478.2 million. That's down slightly from £486.1 million reported the year before. Costs will be under the microscope as freight costs, wages and overheads continue to rise. Boohoo is attempting to strengthen its EBITDA margin back up to 10% after it fell to 6.3% in the previous financial year. Even so, margins are only expected to come in at 4% to 7% amid supply chain challenges. The figures come as the share price fell to the lowest level this year, although has rebounded since. And Thursday is interest rate decision day here in the UK. Well, the Bank of England has raised interest rates at the past 4 straight meetings going back to December, and is expected to hike again as inflation remains elevated at over 9% and continues to rise. A 25 basis point hike is fully priced in, and a 50 basis point hike is 17% priced in as of right now, as the central bank attempts to rein in inflation. Even so, with growth as good as stalling, fears are rising that the Bank of England could tip the UK into recession if it does indeed continue to hike rates. The meeting comes as the pound trades around 10% lower versus the dollar over the past 12 months. So as a result, do keep an eye on the pound and of course the FTSE. On Friday, Tesco released their Q1 results. Now, Tesco's share price trades down 10% so far this year, despite a reasonable set of full-year figures in April. Investors have adopted a cautious approach to the supermarket giant amidst high inflation and the cost of living crisis. Tesco has guided for adjusted operating profits in its new financial year of £2.83 billion. The supermarket also agreed to expand its Aldi price match scheme to 650 lines, which will apply downward pressure margins. Tesco has also increased wages by 6% in an attempt to maintain service level. Meanwhile, rising petrol prices will indeed increase the cost of delivery and logistics. And this all comes amidst Tesco's 3-year cost-cutting programme, which is expected to generate savings of around £1 billion. And finally on Friday, the motoring and cycling retailer HALFORDS is due to report full-year results, and expectations are for a mixed performance. Analysts expect a 7.5% increase in revenue to £1.39 billion. However, underlying pre-tax profits are expected to fall 11% to £85.9 million. However, this is mainly owing to tough comparisons from the previous year, which saw profits pop 83% and will be just over the midpoint of the £80 to £90 million range that HALFORDS guided for. The auto centres, which suffered during the pandemic, continue to rebound, and like-for-like sales of motoring and cycling products are expected to rise. With inflation rising and the cost of living crisis hitting households, attention will be on the overall outlook. So, those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due this week. In the FTSE 100, we'll hear from Persimmon, 3i Group, Land Securities, RS Group, Intermediate Capital and Airtel Africa. And in the FTSE 250, we'll hear from XP Power, JTC, Ferrexpo, TBC Bank, Pets at Home, Fidelity China, Special Situations and Personal Asset Trust. So there you have it, it's still all about inflation and interest rates. As always, thanks for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.